in Pedro Antunes. He's chief economist at the Conference Board of Canada. Pedro, what do you think? What's your view of core median inflation coming in significantly softer than expected?
Well, that's terrific news, really. I think this is going to be another sign and, assurance that the bank is going to start to take that burden off of households by lowering interest rates come June. I think the bank has been very careful around its messaging. I think perhaps some mistakes were made during the pandemic about where interest rates are going to go, and I think they've been very, very careful now on the downswing of things. So I think we can be more assured now that we will see a decline in rates starting in the summer here.
What's your view? What does summer mean? June the 5th? That's, I think, technically still the spring, or July 24th, which is solidly into summer territory.
Fair enough. Yeah. No, that's a good point. I think with the bank, I mentioned June. I think we're probably going to see that materialize in June, that first interest rate decline. Let's not forget, though, that on the way down, I think interest rate declines are going to be way slower, or way take more time than certainly when they came up. And the other point is that they're only going to come down halfway, probably from those zero rates that we saw during the pandemic. So rates are going to continue to stay high. The other thing that's really important, and we saw that in the reaction of the dollar to these kind of good inflation numbers in Canada, is that in the U.S. they're not having as much certainty around rates coming down, and this is why that differential on interest rates is causing the dollar to come down a little bit. But it's also important to note that if U.S. rates stay high, that is going to have an impact on market rates even here in Canada as well.
Pedro, a quick question for you, maybe for the viewers, if you can explain the nuanced differences between normal inflation, the core inflation number, and some of the differences between those, because they are significant.
Yeah, well, I think, essentially, the bank is trying to remove volatile items, certainly things like indirect taxes. They're trying to remove volatile commodity prices, or the impact of gasoline, for example, or of food prices even, which, as you know, food prices can swing quite dramatically through the seasons. The other piece that's important here is these are kind of filters on inflation, on the different components of inflation, and the formulas are actually quite complex. But the point is that they get at kind of that those underlying pressures that the bank feels are important in terms of setting, kind of the structural price gains or price increases within the economy. One important piece I think that we shouldn't forget about is also the wage increases, and those have been coming down, but more slowly. And I think the bank is still very concerned around where wages are headed. And I think the good news on that front is the fact that we have seen the unemployment rates continue to kick up, despite the fact that job creation has been pretty good. So that's another sign, I think, that inflationary pressures are kind of easing across the board here.
We get a federal budget, of course, Pedro, at 4 p.m. Eastern Time today. The opposition, of course, has charged that the Liberal government has fueled inflation with its spending. We do know that in the run-up to this budget, the government has announced about $46 billion in measures and is expected to at least partially pay for those measures with higher taxes on wealthy individuals, which has been fairly clearly signaled by the finance minister herself, and perhaps on higher corporate taxes on some sectors of the Canadian economy. What are your thoughts on government spending and inflation? Has the government made it more difficult to tame inflation through its spending?
Well, there's no doubt that time and time again, especially since about 2022, when we essentially the economy was at full employment, we could have eased up a little more significantly on the spending measures. But what we've seen the government doing is every time that there's a little bit of room to maneuver, in other words, that the revenue side maybe comes in a little bit better than expected, or the expenditure side is down lower than expected, we take that room and we reissue new measures to eat up that space. So I think the expectation here is we're seeing the same thing happening. Perhaps there's a little more fiscal room to maneuver on the revenue side, because the nominal side of the economy, mostly through exports and resource prices, have been doing perhaps a little bit better than expected. I think there may be hopefully some measures to kind of lower government spending at the departmental level. We keep hearing about how the size of the public service has grown much more quickly than the size of the economy or the population. So perhaps there's some room to maneuver there as well. But overall, yeah, we have not seen a lot of restraint here from federal or provincial governments at a time when the central bank is really trying to hold back the economy. So these things are essentially rowing the boat in the wrong direction here.